Dear all, first of all, Than247 would like to thank you for watching the channel. Welcome to the today's Fluctuations. Impact on gold prices November 6, 2025. In today's issue, we will update the developments in domestic and international gold prices, along with economic factors and prominent military events that can directly impact the global gold market. Part I, Gold Price Update in the past 24 hours. On November 6, 2025, the world gold price continued to record remarkable fluctuations. According to Reuters, the spot gold price exceeded 4,000 USD ounce, reaching about 4,011 United States dollars and 79 cents ounce at 9:14 GMT. Thanks to the weakening USD and concerns about the possibility of a US government shutdown, Trading Economics recorded a price of about 3,985 United States dollars and 53 cents ounce, while a report from Vietnam said the world gold price was updated at 3,979.44 USD ounce. By region, Europe. 150 currency announced the gold price in Europe. 10:20 a.m. Brussels at 3,485 euros and 81 cents ounce, up 0.96% compared to the previous day. Gold Avenue recorded the gold price in euro gram at 9:37 a.m. at 112 euros and 43 cents gram. Goldprice.org listed spot gold in Europe at around 3,977 United States dollars and 3 cents ounce converted. Comment: gold prices in Europe remained high. The slight upward trend reflected the safe haven sentiment and global economic developments. Asia. According to Futu News, in the morning session in Asia, gold prices decreased slightly by about 0.2% to 3,971 United States dollars and 75 cents ounce. In India, 24K gold was 120,880 10 GM. 22K gold was 110,807 10 G. Comments: gold prices in Asia adjusted slightly due to better than expected U.S. economic data, reducing the possibility of interest rate cuts, but remained high due to demand for safe haven assets. Brief analysis: the slight increase in gold prices reflects the sentiment of seeking safe haven assets. However, the upward trend was limited by lower expectations of Fed interest rate cuts. A slightly weaker USD supported gold, but positive signals from international trade and stability in some regions curbed demand for safe haven assets. Part 2, Global Economic Information Affecting Gold. Over the past 24 hours, global financial markets recorded many notable economic developments. U.S. The USD continued to strengthen as investors awaited the ADP employment report and the services PMI. 10-year bond yields remained around 4.5 to 4.6%, putting pressure on gold. The risk of a U.S. government shutdown remains unresolved, with Congress debating a temporary spending package. Gives impact: strong USD plus high yields equals gold price restraint. Political uncertainty slightly supports gold. Japan. Prime Minister Sanae Takaichi's government establishes an economic strategy steering committee focusing on chips, AI, shipbuilding, and defense. The BOJ is expected to implement appropriate policies to achieve a sustainable 2% inflation target. Yen exchange rate fluctuations are closely monitored. Gives implications for gold. Increased public spending and possible changes in monetary policy could impact the USD and gold prices. China. Agreement with the U.S. on soybean imports approximately 12 million tons in 2025, 25 million tons year in 2026 to 2028. The U.S. temporarily suspends some export controls on rare goods. Domestic economy still grows slowly, consumption is weak, real estate has not improved. Gives implications for gold. Risk sentiment is more stable, may reduce demand for shelter, but direct impact on gold is currently limited. Russia. Central bank cuts interest rates from 17% to 16.5% October 24, 2025, maintains tight monetary policy, gives implications for gold. Indirect impact. Russia is not a major global gold market, so the impact is limited. Europe. ECB is cautious, does not raise interest rates. Weak euro makes USD stronger, puts pressure on gold, oil and other commodities. Brent oil prices increase slightly around 86 USD barrel, may support gold as a hedge against inflation. Comment. Gold is sideways, held above 4,000 US per ounce. The market is waiting for US employment data and Fed speech in the next 48 hours to determine the direction. Part 3. Political highlights last 48 hours. US. Risk of government shutdown and rising political risks could boost capital flows into gold. France. Government opens procedures to suspend Chinese e-commerce platform SEIN, escalating EU-China trade tensions. Cameroon. Security forces suppress protests, at least 48 people killed. Increasing risks of regional instability, indirectly impacting commodity markets. Part 4. International military and strategic developments. 1. Pokrovsk, Ukraine. Russia steps up attacks, takes control of strategic intersection. If successful, it could change the balance of power in Eastern Europe, boosting safe haven flows into gold and USD. 2. Gaza Strip. Hundreds of Hamas militants trapped in tunnels. Israel responds with airstrikes, increasing the risk of conflict escalation, impacting investment sentiment in gold. 3. Baltic Sea. NATO increases patrols and exercises to counter Russia, increases geopolitical risks and impacts energy and metal markets. 4. South China Sea. Philippines. Testing independent defense strategies on small islands, increasing vigilance against China. Indirect impacts on supply chains and shelter psychology. 5. South China Sea, U.S., Philippines. Launch of Task Force Philippines to counter China. Regional tensions may boost demand for shelter and impact transportation, energy, and logistics markets. Part 5. General comments. On November 6, 2025, world and domestic gold prices recorded a sideways trend, but remained at a high level. With spot prices above 4,000 US, gold fluctuations are being affected by many factors at the same time. 1. U.S. economy. The stronger USD and rising bond yields restrain the increase of gold, while the risk of a government shutdown still slightly supports gold as a safe haven asset. 2. Asian economies. Japan. China and Southeast Asian countries have new financial and trade policies, creating pressure and slight support for gold prices. Depending on the impact of inflation expectations, exchange rates, and capital flows. 3. Geopolitical and military fluctuations. Hotspots such as Ukraine, Pokrovsk, the Gaza Strip, the Baltic Sea, and the East Sea continue to create instability, causing investors to seek gold as a safe haven. 4. Commodities and energy. Brent crude oil prices rose slightly, raising inflation expectations, thereby indirectly supporting gold. Overall, the gold market is reflecting a risk-off state combined with expectations of interest rate fluctuations. The short-term trend is likely to continue to move sideways or fluctuate within a narrow range, with sharp price jumps only appearing when there is important U.S. economic data or new geopolitical fluctuations. Recommendations from AI experts. Based on the analysis of recent economic, financial, political data, AI experts make the following recommendations for investors and those interested in gold. 1. Monitor the USD and US employment data. Gold prices are currently sensitive to the USD and bond yields. Any employment data, a DP, NFP, or Fed speech in the next 48 hours can have a strong impact on gold prices. 2. Maintain a flexible position in a tense geopolitical context. Investors can maintain a part of their safe haven portfolio in gold, while monitoring fluctuations in stocks and bonds to balance risks. 3. Monitor military hotspots. Ukraine, the Baltic Sea, Gaza, and the South China Sea are areas of high geopolitical risk. Any unexpected developments can push gold prices up sharply in the short term. 4. Pay attention to regional fluctuations. Europe and Asia recorded high gold prices, but with different fluctuation amplitudes. Taking advantage of regional price spreads can support effective buying and selling strategies. 5. Long term. If geopolitical factors continue to be unstable, combined with flexible monetary policies in major economies, gold will still play a role as the main safe haven in the risk hedging portfolio. In summary, the safe strategy is to maintain a moderate exposure to gold, closely monitor economic data and political military developments to promptly adjust positions when necessary. Here is a summary of the highlights of the past 24 hours, compiled by Thin247. If you find the news useful, don't forget to subscribe to the channel and hit the notification bell so you don't miss the latest updates every day. Thank you for taking the time to watch. See you in the next news.